And same thing with Korea. They had these memory companies that went crazy, and now it trades it at almost 4 times GDP. Just stupid. Now, down 20% in the last 5 days, probably going to go down a lot more. Does all of that trigger a 1929-esque collapse this fall in the U.S.? Certainly possible. I mean, it's kind of ironic that the book 1929 came out, earlier this year or late last year. And it is interesting. There is this 90-plus year cycle that tends to repeat itself.
Bitcoin's 4-year cycle was supposed to be dead. According to Mark Yusko, the market couldn't be more wrong. Mark Yusko is the founder, chief investment officer, and managing director of Morgan Creek Capital Management. Bitcoin's recent consolidation has led many investors to question whether its long-term bull market remains intact. But Mark Yusko argues that the market is overlooking the asset's strongest fundamental drivers. He believes Bitcoin's intrinsic value is best measured through network effects rather than short-term price action, highlighting Tim Peterson's Metcalfe's Law model because it accounts for the natural evolution of networks. As participants leave and new users join, the model still estimates Bitcoin's fair value at roughly $105,000 to $108,000, implying that the cryptocurrency remains undervalued despite recent volatility. Yusko also rejects the idea that institutional adoption has eliminated Bitcoin's familiar 4-year cycle, arguing that the halving mechanism is permanently embedded in the protocol. By cutting miners' rewards every 4 years, Bitcoin reduces new supply and encourages miners to hold coins longer, creating conditions that have historically supported higher prices. As prices begin rising, investor attention, media coverage, and speculative capital often accelerate the rally beyond fundamental value before fear-driven corrections eventually restore balance. Yusko believes this cyclical pattern could become even more significant if today's capital rotation reverses. He argues that several high-profile AI-related equities, including privately traded SpaceX, have reached valuations that are difficult to justify mathematically over the long term. In his view, excessively valued growth assets may eventually face a correction, potentially as early as the 3rd or 4th quarter. If that occurs, capital searching for more attractive opportunities could rotate towards scarce assets such as Bitcoin and gold. Rather than signaling weakness, Yusko sees Bitcoin's current period of consolidation as a stage within its broader adoption cycle, supported by expanding network value, predictable supply reductions, and the recurring behavioral patterns that continue to shape every major crypto market cycle. If you enjoyed this Bitcoin market analysis and want more expert insights from the world's top investors, be sure to like, subscribe, and share to stay ahead of the next big market move. And now, let's hear what Mark Yusko has to say.
As I understand it, and I haven't talked to Tim Peterson is the guy that does the model that I like the most. I mean, there are a number of people who calculate Metcalfe's Law values for Bitcoin. But what I like about Tim Peterson's model is his decay factor in the model is a little higher. Because if you think about a network, right? Think about your friend network. There are people you knew when you were young, who you kept in touch with for a while, and then they kind of fade out of your network and they get replaced with new people. And then those people fade, and so networks change. And the number of people that leave a network, the decay rate, has to be positive. A lot of the early Metcalfe's Law said, there'd be no decay. Once a person becomes a Bitcoiner, they're going to be a Bitcoiner forever. Maybe, but not necessarily. People pass away, people change their mind. So long story short, I think Tim's model today says Metcalfe's value is somewhere still like 105, 108, something like that. Significantly higher than where we are today. Now, why would that be? Well, we talked about this. The 4-year cycle, which a lot of people tried to say was dead and that institutionalization was going to get rid of it. I'm like, no, humans are going to human. And humans are going to follow this pattern because the 4-year cycle is baked into the code. It's hard-coded into Bitcoin. You say, Mark, what are you talking about? Well, every 4 years, we have the block rewards. So we cut the number of rewards in half. So in theory, if the miners who are mining to protect the network to secure the network, if suddenly their revenues get cut in half, some of them would go out of business. Well, what's their incentive then? Then their incentive is to not to sell the Bitcoin until the price rises so they can cover their costs. And so there's a natural movement that's incentivized by the halving for the price to rise. Well, when something starts moving, when the price starts rising, that attracts attention. And that attention pushes the price even further. And then at some point, it gets to the speculators and the gamblers, and they come in with leverage, and we get the price to go way above fair value. And that's where we were last October, is we were way above fair value. And unfortunately, then humans are going to human. They're going to panic. They're going to sell.
While most investors see a crypto winter, Mark Yusko sees one of the best Bitcoin accumulation opportunities in years. Bitcoin's prolonged consolidation has renewed debate over whether the market is still trapped in a crypto winter, but Mark Yusko believes the current weakness reflects investor psychology more than deteriorating fundamentals. He argues that Bitcoin repeatedly swings above and below its intrinsic value as greed and fear drive speculative buying and panic selling. While prices have corrected sharply, the network itself continues to strengthen through rising user participation, transaction volume, and mining hash rate. Yusko also notes that the latest drawdown has been considerably milder than previous bear markets, suggesting Bitcoin may be entering a more mature phase. Rather than selling into fear, he says long-term investors and whales have been steadily accumulating Bitcoin whenever it trades below its estimated Metcalfe's Law value, viewing periods of pessimism as opportunities rather than threats. This long-term perspective aligns with the latest Bitcoin rainbow chart, which continues to place Bitcoin in its deepest undervaluation zone through August 1, 2026. With Bitcoin recently trading near $62,655, just below the chart's historic fire sale threshold, the model suggests the market remains significantly discounted despite ongoing macroeconomic uncertainty. While near-term price action could remain influenced by Federal Reserve policy and ETF flows, Yusko maintains that Bitcoin's expanding network, digital scarcity, and recurring market cycles continue to support a constructive long-term outlook. Do you think Bitcoin is entering its next accumulation phase, or is more downside still ahead? Share your thoughts in the comments below, and don't forget to like, subscribe, and share for more expert crypto market insights. Let's hear what Mark Yusko has to say.
The speculators on the other side come in and short, and they push the price back below fair value. And the people that don't have conviction, meaning they don't either understand the fair value of the asset, or they don't know, why they're in the asset, they just bought it because it was moving, they lose conviction and they sell. And that pushes the price well below fair value following this cycle. So we go into crypto winter, where we are today. So TikTok next block, the blockchain just keeps moving along. The network keeps growing. The number of participants, the number of transactions, the dollar volume of transactions, that'll just keeps going up. The hash rate just keeps going up. But unfortunately, that, Metcalfe's Law value is the anchor to windward, but the price tends to move in a sine wave, higher and lower, overvalued, undervalued. So when we crashed back through 90K last fall, and we went into this big sell-off in February, going down to the lows of, 60K, people were in panic mode. Now, what's nice is in the previous cycles, we went down 84%, 83%, and 74%. This time we went down around 51%. So people are saying, well, it's going to go down more by October. And sometime around October 5th or 4th, we should be done with this part of winter. And then we start going back up. The number of Bitcoin owned by whales is rising again because they are the buyers of last resort. They're the long-term hodlers, the long-term investors. And investors, I consider myself in this category. I love to buy two types of things. I like to buy something below fair value. That's how I really like to do it, because I'm a value guy. But I will also buy something close to fair value if I think it's growing really fast. So some of the computing companies and the like would fall into that category. But I tend to be a value person. So when Bitcoin today is trading well below Metcalfe's Law value, we start accumulating. So we've been buying a little bit every week since February, and we'll continue to do that, probably through October or so. And then we'll enjoy the ride on the other side. I think there are a lot of people that view Bitcoin as a risk-on speculative asset like NASDAQ and they're interchangeable. I don't think they're that at all, right? I think people own Bitcoin or gold or silver or platinum for very different reasons than they own equities or AI companies. So that said, I do think there's capital that has rotated into speculative equities and debt. Look at Kospi and the the Taiwanese stock market, right? Taiwan is a little tiny island that doesn't even have that many people, and its stock market was like the 6th largest in the world. I mean, it's just silly because they have one big company that makes all the semiconductors.
The broader picture suggests that Bitcoin's long-term investment thesis remains tied more closely to expanding network fundamentals than to short-term market sentiment. Although periods of fear, tighter monetary conditions, and shifting capital flows can create sharp corrections, these phases have historically coincided with continued growth in user adoption, transaction activity, and network security. At the same time, recurring halving events continue to reinforce Bitcoin's scarcity, while long-term holders often use market weakness to increase their positions rather than exit. Valuation models based on network effects, together with indicators such as the Bitcoin Rainbow chart, imply that current prices remain below levels many analysts consider consistent with Bitcoin's long-term potential. If capital eventually rotates away from richly valued speculative assets and macroeconomic uncertainty begins to ease, Bitcoin could benefit from renewed institutional and retail demand. As always, volatility is likely to remain a defining feature of the asset, but its combination of digital scarcity, growing adoption, and resilient network activity continues to support a constructive outlook over the longer investment horizon. If you enjoyed this analysis, make sure to leave a like, subscribe to the channel, share this video with anyone following Bitcoin in the broader markets, and let us know your thoughts in the comments below. Do you think is Bitcoin's biggest bull run about to begin while everyone is still bearish? Thanks for watching, and we'll see you in the next video.